Welcome to the Econograf, a color-coded graphic model of the macroeconomy. It uses graphic shapes and colors to explain the major elements and interactions of the economy from a unique graphic perspective. Shapes and colors. These are the main shapes and colors of the Econograf. In the first column displaying microeconomics, the household and the firm are presented as two-sided shapes, income and expenditure. Below this, the product exchange between the households and the firms is shown as the third item. The labor exchange is shown underneath where work is exchanged for wages. These interactions are the main economic flows along the main street markets represented by continuous text representing economic flows. In macroeconomics, the color-coded private sector and the public sector start the second column, which ends with the business sector and the cross-hatched infill for markets. Creating the graphic private sector. In this illustration, we create the graphic private sector with a circulating series of marketplaces, where supply and demand are pertinent. The dark tan household sector is on the perimeter and the retail firms in light blue on the first inner rectangle. This continuous gap between households and firms is the market conduit where transactions take place. The darker blue shape indicates other private sectors such as agriculture, mining, imports, exports, universities, services and so forth. The white border around this is for the non-retail markets. Supply and demand. These graphs illustrate the supply and demand dynamics in a marketplace. On the left, the animations show supply, while in the hatched marketplace, the upward sloping red supply curve S1 demonstrates that as prices increase, more suppliers are willing to provide more of the product. Demand is represented on the right side of the marketplace by individuals, many with demand for the product. When a supplier reduces the price, indicated by the shift to the second red line S2, the quantity demanded rises, which is reflected by movement along the downward sloping demand curve. This curve shows how consumers typically purchase more at lower prices. These movements demonstrate the law of demand. As prices decrease, the quantity demanded increases. The intersection of the new red supply curve and the green demand curve establishes the new market equilibrium price for the product. Imports and exports. A. Imports, supply and demand. These graphs focus on an importer of Sony screens through the import market, which is the left-hand hatched marketplace. The upward sloping red line represents the supply curve, indicating that higher prices attract more suppliers. The green downward sloping line is the demand curve, showing that lower prices increase demand. The equilibrium price occurs where these curves intersect, balancing supply and demand. B. Exports, supply and demand. At the other end, we examine the export market, using wheat exported to Japan as an example. The supply of wheat, shown in the hatched area at the lower right-hand corner, displays the normal supply and demand curves intersecting at the equilibrium point. Imports and exports transactions. Here we display actual imports arriving at the interface at the lower left-hand corner. In this example, the imported screens arrive by ship, as can be seen by the container ship and the animated mauve arrow. Payments for these imports are shown as the green arrow leaving the country through the imports interface. Currency market. Now that the price and quantities of the screens are determined, the currency market, attached to the bank, is contacted for the exchange rate. The upward sloping red line represents the exchange rate. Actual exports. The transaction focus on the export market. Econograf now focuses on the export interface, which is displayed at the right-hand lower corner with physical exports arriving at the port before leaving the country by ship. Similarly, we see export payments or receipts coming into the country and joining the main economic flows. Currency market. Once the value of the shipment is determined, the currency market at the bank is contacted to establish the exchange rate and the shipment can proceed. U.S. current account. The current account is the difference in value between gross imports and net exports. These static graphics display the current account, which measures financial flows into and out of the private sector through the interfaces at each lower corner. The import payments are shown leaving the bank and traveling along the market conduit to the imports interface on the left-hand lower corner. The mauve bar charts record the growth in exports over 3 years. Similarly, the export receipts travel from right to left and are shown entering the bank through the green arrows. A khaki bar chart displays the muted growth over the last 3 years. Both bar charts are merged at the bottom to show the growth in the current account deficit, which currently stands at $78.8 billion. Fiscal public sector. These graphs depict the fiscal public sector as a distinct entity interacting with the private sector. The private sector collects taxes and sends them to the public sector, which includes national/federal, state/provincial, and local governments. Taxes are shown moving from the taxation interface at the top left to the public sector, then into the treasury. Government expenditure, generally exceeding tax revenue, is displayed exiting the treasury and re-entering the private sector at the top right interface. Detailed public sector. In these lopsided graphs, which are not to scale, we expand the graphic size of the U.S. public sector to show more details of federal taxation revenues and expenditures. They are displayed in more detail exiting the Treasury into an array of different expenditure categories according to the government's pre-prepared budget. These expenditures are animated to re-enter the private sector at the top right interface. The interest on public debt and the federal budget deficit are shown separately at the bottom of expenditures. This graphic public sector includes national/federal, state, and local governments, and publicly owned enterprises. These are deemed to be behind these graphics. All governments collect taxes from wages and profits from households and firms, redistributing them to services like Social Security, health, and education. At the state and local level, payroll and property taxes fund some education, health, and police services, while also paying interest on their separate public debt. Monetary economy. This illustration focuses on the monetary aspects of the economy, displaying flows in a static context. The graphs outline the assets and liabilities, both public and private, on a not-to-scale basis. Capital inflow is shown as the green arrow, representing foreign currency entering the financial markets for conversion to local currency, typically used in domestic markets. Capital outflow is represented by the mauve arrow, indicating capital leaving the economy, usually through currency markets where it is converted into foreign currency. Bond sales and cash flows. The vertical blue and green double-ended arrows indicate a constant two-way purchase and sale of bonds and cash between the central bank and private banks. This exchange sometimes occurs through the financial markets, with the central bank ensuring market stability while private banks seek profits. Two-way transactions. The blue arrows depict the two-way transfer of bonds from the central bank to private banks, either directly or through financial markets. The green arrows show the flow of cash between the central bank, private banks, and financial markets. Each upward movement has a corresponding downward movement. This graphic display of the monetary economy shows that there is a continuous flow of money and bonds between the central bank, financial markets, and private banks. Balance of payments. This illustration focuses on the balance of payments, which balances capital inflow and export receipts against capital outflow and import payments. The capital inflows are shown in green, as are the trade flows at the bottom interfaces. Capital outflows are displayed in mauve. Balance requires that the mauve total outflows should be matched by total inflows. Private capital movements are the main flows in financial markets, including stock exchanges and bond markets. The huge private capital inflows and outflows are by far the largest movements, while official flows are usually smaller to maintain stability. If a large move occurs, central banks may inject currency swaps to minimize the speculators' gains. Large fund volumes seeking profits in financial markets can disrupt them, requiring central bank intervention to maintain currency stability. Currency inflows must match outflows to avoid affecting the currency value. The balance of payments ensures a country's currency is stable, with official capital movements acting as a balancing factor. Summary. The U.S. economy, like all market economies, has a household sector. It follows that the Econograf starts with the household as the basic unit of the economy. It also has a business sector that interacts with the households in two types of markets: product markets and labor markets. So the graphic household is divided into two sides: supply of labor equals income and demand for products equals expenditure. The businesses are similarly divided into revenue and expenses. The household sector supplies labor to the employing firms in return for wages income, and the firm sector supplies products/services to the household sector in return for revenue. Note: the public sector also employs about 25% of the households. Each country, with a few exceptions, has a private sector regulated by a public sector to raise tax revenues and corresponding expenditure. The public sector, including the central bank, is shown as a separate shape from the private sector. In this manner, the economy can be presented graphically with fiscal and monetary interactions between the two major sectors. Each economy trades in imports/exports, current account, as well as capital inflow/outflow, capital account, leading to a graphical display of the balance of payments using these statistics. The public sector generally includes a central bank to control the money supply and currency, and the creation of bonds and new money. These bonds and securities of the central bank, as well as the liabilities, are graphically displayed as three-dimensional shapes surrounding the central bank. Each economy has a series of financial markets graphically displayed between the private and public sectors. The inflow/outflow of foreign capital, both official and non-official, can be expressed, and the conclusion is the balance of payments. About the author. For some time now, economists, teachers and journalists have felt the need for a graphic model of the economy that can be displayed and animated. In response to this need, Econographics Proprietary Limited has developed a series of economic graphics to simulate and illustrate the incomes and expenditures, financial flows and main sectors of the economy. This graphic simulation, the Econograf, has been primarily developed to enable the general public and students to better grasp the complex relationships in the modern market economy.